You have Hang Seng on your screen, which is absolutely flat.
We're going to enter a restrictive stance of policy. And at that point, I think it makes sense that we can slow down a bit.
We actually grew our total business by more than 20% in this quarter.
There is discontinuation of proposal to share 50% of the proposed incremental tariff revenue, which actually led to lower capacity expansion by these pipeline operators.
That's the first tick on the index. Absolutely quiet. The Nifty is up about 18 odd points.
We've been cautious on markets for the last 6 to 9 months, and we continue to have that view. Look, markets are going to be range bound at least for another 6 months.
In the current financial year, FY23, the ROH activity and the supply of spares is expected to be somewhere around 60%, and the balance 40% will be in the manufacturing sales.
That's the new listing, a fabulous one, Kaynes Tech, or however you pronounce it, 32% higher now. That's the premium at which it has listed.
Q2 went slightly better than what we had anticipated.
Benchmark indices are up close to about 0.25% as we speak.
The worry of the stock supply is clearly weighing as far as the stock performance is concerned. Remember, the lock-in for Paytm ended on November 15, 2022.
Steady as it goes, it's up 51 points on the Nifty.
Well, that was a day so far, not very much actually. We'll come to that in a bit, but let me welcome in my colleagues, Nigel and Rima. I'm Prashant. Guys, hi. Good afternoon. I mean, actually, the bulk of the action happened in the first 45 minutes of trade, isn't it? Because after that, it's been, I don't want to say sideways, but it's been steady. Look at that. Almost as if 50 points has been stuck on the tape, printed, and, not very much movement at all. So the sell-off happened right after the word go, and then the market made did a rebound, and it went up 50 points where it has been since about, 10 o'clock in the morning. So 18,200, 18,230, a little higher, a little lower, but not very much after the first 45 minutes of trade. The low today is 18,137. So, as we go into the last hour, I think that's the first level to watch. On the downside, that is, if there is another wave of selling which comes. The 20-day, of course, is even lower at 18,111. The 20-day has also moved up a little bit, but that's the 20-day moving average. Advanced decline, 1:1. It was worse initially, but it's picked up. Real estate, energy and oil stocks are weak, and you've got PSU banks which are up again. Add to the PSU banks, metals are doing quite okay as well. So just a little bit of sectoral flavor, sectoral color with what is going on out there. There is, of course, stock-specific action, new age digital companies, etc., which is going to be a focus of discussion a little later here on Closing Bell. Rima, hi.
Hi. So, in fact, after the first 45 minutes, the trading range in the Nifty has been all of 30 points. That's how steady things have been. Just to quickly highlight a few stocks, IndusInd Bank is one of the big movers. The bank is hosting an investor day meet with the buy-side analysts today. This was the intimation that IndusInd Bank gave to the exchanges yesterday. So currently, as we speak, the investor day is currently on, and the stock is clearly excited ahead of that. The action continues in banks, and in the last 10 minutes, take a look at Bank of Baroda. That stock has spiked up. So Bank of Baroda, get that up for you on your screen. Mazgaon Docks, Cochin Shipyard. Both these stocks came in for profit booking over the last 2 trading sessions, but today there is a lot of buying. Mazgaon Docks is up close to about 8% and Ease My Trip or Easy Trip Planners, that is up 42% in the last 2 trading sessions. Very, very large volumes compared to what we see. And if you just pull up the NSE yesterday, you would have seen a multitude of block deals. Nearly 50% of the volumes yesterday were on account of block deals and bulk deals. So Ease My Trip continues to rally on very, very large volumes. So interesting action in individual stocks, Nigel, even though the index is absolutely steady. Hi.
Well, that's right. Before we talk about the index, I just wanted to focus on the advanced decline ratio. Yet another day, the number of stocks that are declining are more than the number of stocks that are advancing. In the next 60 minutes, more than the index, I would like to see the number of stocks advancing more than the number of stocks declining. That will be some bit of a positive at least, because the last 6 trading sessions, on a day-to-day basis, the advanced decline ratio, the breadth hasn't been great. It's been firmly in favor of the decline. So let's see what that ends up with. On the index itself, well, the range is around 18,050 to around 18,300. And I say this looking at the options data. We have expiry that will play out in the next 3 days. So the 18,200 put, that's the most active today. The 18,100 put as well. At the start of today, the premium was around 50 rupees. It's come down to around 25 rupees. So, for the writers out there, 18,050 becomes very important. And on the upside, the 18,200 call, that continues to see a good amount of open interest built up. The premium is around 80-90 rupees odd. So closer to around 18,300, that's where the bears will come into brawl. So let's see how this goes. But I think we have, that broad 300-point range for the next few sessions, and then we'll take the December series as it comes. So breadth of the market, keep an eye out on that. Rima?
Okay, let's tell our viewers what we've lined up for them on the show today. Stocks of new age tech companies like Paytm, Nykaa and Delivery under pressure as anchor investors sell stake via block deals, and fears of more in the offing cast a shadow. Complete analysis coming up on the show. It's a strong debut for Kaynes Technology on the bourses. The company is listed at a premium of 32%. Details on the stock to understand the business model, and we'll get you the management commentary as well. Next, we'll track market technicals with Jay Bala of cashthechaos.com, and we'll also talk all things market and the top sectoral bets with Ravi Dharamshi of Value Quest Investment Advisors on the show.
Okay, how should you position yourself in the last hour of trade? That's the question, isn't it? Mitesh Thakkar is with us. Mitesh, will we see a move, in the last hour, you think, and which direction? What should one do?
Good afternoon, Prashant. I'm not really biased about a big move happening. I think volatility indicators have turned even flat, and we had talked about markets getting into contracting zone, maybe even a mild pullback and correction would happen. That has not happened as yet, but it's not a market, which is in an uptrend. So I think broadly it could be a market which would still be very sideways. Today it's made a very important pivot at 18,150. Now I think getting past 18,250, 260 zones could confirm that becomes an immediate support area. So then you might want to look at even a smaller and a narrower range. But that apart, not much happening in the markets. Either buy closer to about 18,150 or wait for 18,250 to be taken out. Having said that, I have a buy on IndusInd Bank. I think we were just discussing that stock. Good breakout, very strong price and volume action here. That's a buy with a stop below levels of 1150. Look for targets in the range of about 1200. And a sell on Naveen Fluorine with a stop at about 43.30 for targets of 4200 to about 4180 on the downside.
Okay, all right, Mitesh, thanks a lot for that. Prakash Diwan joins us as well. Prakash, well, these PSU banks, they are saying the party isn't over. You can still get in and make some money. That's at least what the screen is suggesting. In the last 30 minutes or so, you have stocks like Bank of Baroda that have just spiked up to the high point of the day. What is your pick from the PSU basket? How would you play it?
Good afternoon, Nigel. So, that's been a very promising and interesting space. We saw the first round where the good boys did so well. And then, of course, all the smaller banks, the ones who are even struggling, joined the party. The strugglers also have been lapped up. Look at some of them like Central Bank, Indian Bank, IOB. I mean, there's a host of activity in that long tail that you have on the PSU side. Now, what's now happening is because some of these not so great performing banks have also got overvalued or overbought, I get a feeling that you probably will see quality come back. And that comeback is only through the likes of SBI, BOB and a Can Bank and maybe a Bank of India if I had to add another to the list. So these 3-4 top banks are the ones that probably are more resilient given the fact that all the other smaller banks have got overbought. So I think it's, with allocation still coming into this pocket and things looking so promising, it's bound to kind of happen that some of these will get chased even on the way up. So the best out of that, given valuations, given the transformation, of course, continues to be Canara Bank for the upside that it still offers. But you'll have to be now much more patient in terms of the metrics improving and all that profitability coming back with the elevated ROAs that they have clocked. So it's going to be a slightly longer haul than the first. The easier part, the easier money has been made. But even if you have a longer term orientation, then you would still make some money on some of these bigger, well-run PSU banks.
Okay, bet on bigger, well-run PSU banks. But right now, it's been a rising tide, which has lifted all the PSU banks. Prakash, wanted to get your thoughts in on Easy Trip. 20% up yesterday, another 19%, very, very large volume. Is there something that you've picked up from the market? What's driving this kind of euphoria in the stock?
Yeah, I mean, it was quite interesting to see the activity even on the screen yesterday. If I'm not mistaken, there were fairly, large-size transactions that took place, and it looks like there's some sort of a buying which precedes an acquisition from anecdotal behavior. I mean, I have no information or any input in terms of what's happening here. But given the nature of the business and the behavior of the stock on the screen, I'm just trying to put two and two together by saying that there is some sort of a preclude to maybe a larger acquisition or stake change or something. So that typically happens when, a company that's probably in the promising space but has not been returning great profitability numbers may start behaving very differently if there's a change of ownership is the expectation. So that's what a lot of market people believe. It's a good business in the right time, at the right time in the country of our size and potential, but probably things need to change a bit to start making it profitable. Now, who probably is successful in doing that, I have no idea, but that's what it's looking like. And there could be some value unlocking which could emerge from here.
Okay, Prakash, good afternoon. Just coming to you, but I just want to talk about these new age companies as well. Actually, I should call them new age and recently listed as well. I mean, names like Paytm, Nykaa, Delivery, etc. They've been in focus largely on the back of these anchor investor lock-ins ending 1 year down the line post-listing, and many coming to sell, right? But not the entire stake has been sold, even though price damage has been quite a bit. What has been sold, who are these investors, and how much is left? Those are questions which my colleague Vivek has kind of put on a list. He's done some digging. He's standing by on the big wall with all of the details. Vivek, over to you.
Well, that's right. So what we've done is we've analyzed the underperformance of these new age businesses, given the sharp selling pressure that we have witnessed. So, let's have a look at the 4 recent listings where you've actually seen the fact that the anchor investor or the lock-in has actually expired. So first up, the one that we're looking at is Nykaa. This particular stock, despite the fact that it's not completely, given up as some of the others, this particular stock, ever since the lock-in has expired, has seen a block deal in every single session after that. The announcement of the bonus issue actually compounded the confusion in terms of how exactly the selling would materialize. And, if you're talking about some of the key sellers, every single day, we're actually seeing some significant block deal happen over here. Lighthouse, at this point of time, we understand, has completely exited from their stake as far as Nykaa is concerned. TPG Growth was another significant seller from Nykaa. The other one that we are looking at this point of time is Delivery. The lock-in for this particular stock or this particular ended on November 21st. One of the major investors, Carlyle, exited half their stake. They had around 5.2% stake. They've exited 2.5% stake. So they continue to hold around 2.5% stake. And this is the fear that we are seeing most of these companies actually having at this point of time. The third name that we are looking at after Delivery is PB Fintech. When you're talking about PB Fintech, remember, this itself was a disruptor in the insurance space, but after the listing, the company also saw quite a bit of disruption happening in terms of the government coming up with new norms, especially from IRDAI. This particular stock has been an underperformer and has seen significant selling pressure, especially from Tiger Global 8 Holding that has sold a significant chunk of its holding. Lastly, coming to the biggest underperformer, we are talking about Paytm. Paytm has seen a biggest decline in terms of the selling pressure since its listing. The lock-in ended on November 15th. And when you're talking about the stock performance, it's down 75% from its IPO price. Remember, the IPO price was 2,150. Alibaba.com, was the one that continues to have a significant stake. And also, when you're talking about their stake, it's a little over 31%, both of these entities combined.
All right. Thanks very much for that. Actually, this is interesting because, especially in the case of Paytm, what has been sold is minuscule as compared to how much of the lock-in is actually opened up. So out of all the 4 companies that Vivek mentioned, in terms of potential overhang of further selling, I think this is the one which kind of stands out. But it's not just the sort of anchor lock-in and sort of investors selling, that fear which is on the minds of investors. Macquarie, for example, in its latest report is highlighting that Reliance's foray into the financial services space through Geo Financial Services, where Mr. KV Kamath is going to basically helm the operations, poses a big threat to Paytm in terms of market share growth, etc. Not just Paytm, they talk about threat to Bajaj Finance as well, but Paytm, of course, is a prime candidate there as well. Let's go across to Sonal, who's got the details of Macquarie's note. Sonal, what are they saying?
Thanks a lot for that. Well, some interesting takeaways from the note from Macquarie on Reliance Jio Financial Services. They say that yes, Reliance Industries would transfer 6.1% of the company's shares held by its wholly owned subsidiary to Jio Financial Services, and this means that there is a grand ambition of the company or the group with respect to financial services. Now, Jio Financial Services will differ from most of the fintechs, is what the note says, as it will have access to huge amounts of data. They also say that it can process and analyze this data in real time to offer financial services, and these services would actually be similar to the likes of Alibaba, Amazon, Apple, Facebook and Google as well. So all these big tech names in the US. After demerger, this is a big number that they're talking about. Jio Financial Services could be the 5th largest financial services companies in terms of net worth, where the net worth could be around 1 trillion. Reliance Industries already has an NBFC license which it can leverage to kickstart consumer or merchant lending, and here where they talk about how big of a threat it could be to the fintech business models, as well as the companies which are basically NBFCs as well. So more competition is what they expect in the industry to come in. Jio Financial Services, according to Macquarie, can offer attractive rates in merchant lending and digital unsecured lending markets as well, and that is where the competition will come in from. And you spoke about Mr. KV Kamath, who is appointed as the chairman. They say that the growth or pursuits of this particular vertical could be aggressive because him being at the helm of the company.
All right. Thanks very much, Sonal, for that. So there is one more kind of sort of disruption for some of these established companies. Prakash, any thoughts on either the lock-ins as Vivek outlined, or this the threat from Jio Financial Services, which Sonal outlined? Macquarie saying, well, it's likely to be, a significant player. Go on.
Yeah, so let me address the impact of the lock-in getting over, because that's something which is fairly evident and has been in the making for the last week or so. And as Vivek very well explained, it's some of them which are getting impacted for the simple reason that the offerings in the first place were done in times of very exuberant valuations. The environment was so benign, so exuberant, not just benign, and you had easy money. Most of these funds that have invested actually had compulsion to invest at that point in time into businesses that kind of qualified for their objectives. But the nature of the businesses, we understand, are where you scale up, you build up, you get a presence felt, and then you start turning profitable, because all these businesses have done whatever they've done in terms of top line growth in a very short span of time. So retail investors probably need to understand that if you're going to race to a market share situation, you will have to burn cash, and they have burned cash, which is fair enough as a business model. But are you willing to participate in that long journey where it turns profitable is a big question. And my sense is, Prashant, importantly, not just the price erosion. We've seen like 80% in some cases, like Paytm. Nykaa also has had a significant erosion. Now you'll probably see a long time correction as well. So the price correction has happened. It'll probably be followed with a time correction, which is going to be what people should understand, and they shouldn't kind of just expect that the trough has been made and you'll start seeing it go up the same way it's come down. So that's the very important thing that we need to understand. The business has to be given time to turn profitable, and hence that time correction which I alluded. On the Jio FinTech thing, I think it's a very interesting play because all the building blocks have been put in place from the last 3 years. So when Jio launched that omni-channel campaign and tried roping in the traders into its network, while the consumer side was anyways growing at a very scorching pace, it kind of makes for a great ecosystem to just pump in the new product lines, and finance is something which they can very easily do. It would probably start with trade finance and then personal loans and then bigger ticket products and stuff like that. But I think it's still some time for it to start making an impact on some of these other businesses. So that could probably be a bit which still might be some time away, at least 6 to 12 months away before you will start seeing the impact. But yes, it's a very promising thing for the Jio platform. That's one more revenue stream that we need to put on an SOTP valuation next time once it starts churning the numbers, because it's an incremental growth which comes to the balance sheet, right? So that's going to be a great addition, very exciting. But it'll take some time for it to impinge on the prospects of the competition or the peer group at this point.
Okay, all right. Prakash, I wanted your view on Metropolis Health. They've put out a clarification on the exchanges. We had it flashing for our viewers on the screen. They're saying that the IT department officials, they've left their premises. There's been no impact on the operations, and business activities have resumed as normal. The stock took a hard knock because of that raid that was there. What's your view at around this 1,450 odd?
So, Nigel, it's an interesting behavior. As a stock, if you see, it resisted a lot of the negativity that emerged from this disruptive moves that some of the competition made, right, in terms of pricing. Right? And when they reset their pricing, the impact was felt on the P&L, or it began to be felt on the P&L. Now, before that could damage it further, you got this trigger. So a lot of people probably, believe that if there's some event like this, it's time to kind of look at something else and move out. And that's what I think they're trying to assuage or mitigate that perception by clarifying that the raid is over and it's not impacted the operations of the diagnostic centers, which is the revenue generating area, right? So hopefully they'll probably have a steady state from what it was, let's say, before this event happened. But I don't see it to be of great value suddenly at even these 1,400 plus levels where you could kind of come back to the highs of the past. So it's going to be a while. It may not be as negatively impacted as some of these new age businesses have got, because it's been profitable. It's a much more established, proven franchise. So, it's not going to be negative in that sense from here on, but I think it'll take time to gradually participate in the growth on the numbers as we go along.
Prakash, to stay on, need to slip into a break. As we do that, here is a quick programming note. To fully commit to the cause of bridging the gender parity gap at the workforce, CNBC-TV18 is all set to lead charge with a one-of-a-kind mega initiative, Future Female Forward, the Women's Collective, presented by HSBC. The initiative will be officially launched through an exclusive on-ground event on Friday, the 25th of November, in the presence of Shireen Bhan, the managing editor, CNBC-TV18, Mr. Hitendra Dave of HSBC, and other women leaders of India Inc. Also in attendance will be some of the most influential voices from business, entrepreneurship and entertainment. Don't forget to tune in to CNBC-TV18 on Friday, the 25th of November, 5:30 p.m. onwards. Welcome back. JSPL is up 2% in trade, while GAIL is now gaining ground. It was flat in the morning, but now is up close to about 1.5% yesterday. The PNGRB notified the natural gas pipeline tariff regulations. There are a lot of details in there, but one of them is the discontinuation of a proposal to share 50% of the proposed incremental tariff revenue. On the back of this development, a lot of these pipeline operators like GAIL and GSPL perhaps were holding back on capex. Now that this incremental tariff does not need to be shared, they've discontinued this. Perhaps these companies could look at brownfield network capacity expansion. This could be one of the reasons why these pipeline operators are higher in trade. Prakash, do these stocks make sense at these levels? What have you made of these regulations?
No, so I think it's corrective in terms of, if you recall, there was a lot of negativity around the impact some of these regulations, if they were not amended, would have. And I think this is more of a corrective phase. And I have been extremely positive on most of the companies in the sector for the simple reason that in an energy-starved environment, this offers a far more effective and faster solution to all energy needs that we could kind of cater to while renewables and all start coming into picture. So I think the likes of GSPL offer great opportunity from a valuation comfort as well. There's nothing outwardly negative about valuation or being rich or the demand side being not visible enough. In fact, this will ensure that you grow at decent margins as well. So I think it's a corrective regulation which has probably not been fully priced in. There could be some more move attributable to this, but even on an otherwise secular basis, I think some of these companies like GSPL, as I mentioned, I'm extremely positive on.
Okay, all right, Prakash, we'll thank you on that note. Thanks so much for stopping by and in fact giving us a view on a whole host of stocks. But for the time being, let's hop across to my colleague Vahishta. She's standing by to tell us about the new kid on the block, Kaynes Technologies. Vahishta, beautiful listing.
That's right, Nigel. A beautiful listing, very strong market debut today. Lists at a premium of 33% and the listing price is coming at 778 rupees per share. The company is an electronic system design and manufacturing services company and the customers are across various industry verticals, which includes the likes of automotive, industrial, aerospace and defense, IoT, medical, railways, consumers, etc. The issue size of the IPO is at 858 crores, where the fresh issue includes 530 crores while the remaining comes from the offer for sale. The promoter holding before the IPO was at 80% approximately and post-issue falls to 63%. The proceeds of the fresh issue are expected to be utilized for investments in a subsidiary, repayment of their debt, working capital funding requirements and also to be utilized for capex at their existing manufacturing facilities. We hosted the management on our channel today morning and they said that FY23 revenue guidance is at 1200 crores. Remember, FY22 revenue was at 706 crores, so there is a jump out there. By FY25, EBITDA margins are expected to jump to 14.5% versus FY22 margins, which were at 13.3%, so there's a growth out there as well. The medical electronics is going to be a focus area for the company as it is a margin accretive business. Aerospace, defense, outer space and nuclear segments will contribute 8 to 10% of the revenues by FY25, which currently is at 3%. In terms of headwinds, the company says that China-Taiwan war could be a major threat for the growth prospects of the company as nearly 10% of the raw materials are sourced from China and most of the processes are made in Taiwan. Back to you.
We are expecting to do about 1,200 crores of revenue this year, and on the margins, I would like to say that our strength is diversification, and since we are in the diversified verticals of business and there is a very good mix between the automobile, industry and railway verticals, we are sure that we will be able to keep our margins going strong. We are targeting to improve our margins to up to about 14.5% by FY25.
On the aerospace defense market, we are a player. Only thing is our turnover in other areas are going up. Because of that, it is hovering on around 2 to 3%. However, I am confident by FY25, this will touch a 10% level. Because we are working on new product development. We are working on new product development for our clients, and which should be completed in a year's time.
About 10% of our total buy is from China.
All right, so that's the new listing. We have the Ravi Dharamshi now joining us, Chief Investment Officer at ValueQuest Investment Advisors. Ravi, it's a pleasure. Welcome back on CNBC. Thank you very much for your time. Prashant this side. I have to say at the outset that I hope you will talk about one name like Mazgaon today, like the last time you were on the program. And what a run, boy, it has had. I mean, amazing.
Prashant, it's just pure luck. There is no way that anybody could have predicted the kind of run. So, we try to analyze the opportunity top down and see if bottom up, which is the company that is going to ride the trend the best way. So as we spoke the last time around, we are very bullish on defense as a sector. And within defense, we are very bullish on Navy and Air Force. And these are the two service arms of the government which are going to spend more than $1 what is going to be allocated to them in the budget. So, and there are very few players that can address that kind of opportunity. So once you are sure which is the area that you want to bet on, whether it is the aircraft manufacturing or the ships, or whether you want to bet on arms and ammunition, what kind of things that you want to bet on, then it becomes very clear which are the players to bet on. It's not like there are too many players available out there. So now suddenly this is actually a birth of an industry that is taking place. The private sector is for all purpose till date non-existent, and now it is going to take birth. So, but for the next 10 years, it's going to be the public sector defense companies that are going to mint the most of the opportunity that lies ahead of us.
Okay. Hi, Ravi. Good afternoon. Thanks so much for joining in. Ravi, well, you've got that defense call bang on. Everyone's talking about defense. In fact, earlier today, we spoke to the management of HAL as well. And they are one of the rarities that we have. They go ahead and upgrade their margin guidance. That said, though, there were a couple of sectors that you're a little bit cautious on. The IT pack and pharma. Do you stick to that view? Or do you believe that it's gradually coming into a zone that maybe you'll want to start chipping in?
Hi, Nigel. Good afternoon. no, we continue to stick with that view. And I'll tell you where the view is flowing from. So we do have a negative view of what's happening in the world. Unfortunately, or it is negative for the outward-facing sectors like IT and pharma. There are, of course, other challenges that the sectors face. For example, pharma, there is a huge consolidation of buyers. So there is a structural shift of bargaining powers towards the buyers as against the manufacturer of the product. So pharma is facing a constant challenge of reduction in the pricing going forward. Now, IT, again, IT is a case of more, post-COVID kind of one-time demand that propped up the order book. And see, this is a large mature sector. IT services are commoditized and a large mature sector. One has to be very clear that this sector cannot grow at more than 10-12%. If a stock price is factoring in 25-30% kind of a growth at the peak margin, then one needs to be careful about it. So it just needs to be some recalibration of the valuation is all that is required. Otherwise, IT services sector will continue growing. And within that, you can probably find one or two companies that can grow higher than the market at 15-20%. But those are more rarity and not an across the board kind of a thing. So near-term headwind in the IT sector remains with the kind of churn that we are seeing at the headcount level. The demand is slowing down. There are layoffs happening in US. US market overall is slowing down. So it's prudent to be watchful from the next 1 or 2 quarters point of view. Let the valuations correct a little bit more. At what point of time one can reevaluate it again.
Ravi, just want to get back to the point about, defense and public capex. Now, when we look at public capex, the understanding in the market is that the road capex has played out over the last, couple of years. Defense is now well recognized, but the next thrust of government spending perhaps could come in railway-related stock as well as railway infrastructure. And we're already seeing so many of these railway overhead bridges, getting renovated. And the railway stocks have already run up in anticipation that the government is going to be spending big on railways. That's going to be the new area of focus, especially perhaps when the budget comes. Now, the problem is the stocks have run up, and in the past, we've had multiple cycles in which these stocks have done well, only to come back to perhaps even lower levels. So there is still some element of disbelief and skepticism in the market when it comes to PSU stocks. What are your thoughts on these railway infrastructure stocks, which are doing exceedingly well right now? Some are saying it's an up cycle, some are not convinced.
So, hi Rima, absolutely correct. You hit the nail on the head that these are all B2G businesses, and one needs to be a little skeptical in extrapolating into the future. Is the order book visibility there for 3-4 years time? Like in the case of defense, the order books are already built for the next 3-4 years. So the quarterly performance is going to depend on the execution and maybe some raw material variation, but it is not going to be that the growth is not going to come through. While in the case of railways, that kind of visibility is not present at this point of time. Having said that, overall, I am also a believer in the railway opportunity. However, there are very few direct plays available, direct beneficiaries of the trend. Most of the money getting spent on probably the railway redevelopment, or whether it is the what is this bullet train kind of projects or metro projects, and those kind of that opportunity does not directly affect in the stock market. So that is a challenge of the railway sector, I would say.
Right. No, got that. Ravi, financials is a space you continue to like. We had Macquarie earlier today writing a note, kind of sort of introducing Jio Financial Services with some details of what they expect this entity to be able to do, how it poses challenges to incumbents like Paytm, but also Bajaj Finance. Any thoughts? Have you thought about this in any way? What this could mean? Any thoughts at all? Yeah, go on.
So, Prashant, let me tell you that finance is the most exciting space in India today. Overall, the economy is going from $3.5 trillion to 7 trillion, 10 trillion over the next decade. And if that was to happen, the overall credit to GDP ratio, which is roughly at about 55-60%, will go to more than 100%. So the overall credit in the system is going to grow exponentially over the next decade. Having said that, there are very few large companies that can actually, kind of absorb that kind of growth. I'm sure there are smaller companies that will also do well. But so from overall finance perspective, I am very bullish on the space. Now coming to your specific question about the fintech. So this space is absolutely ripe for disruption because there are complacent, incumbents out there who are not paying attention to the changes that are happening on the ground. The new age customer definitely is going to gravitate towards these new age fintech companies. So of course, it's a long journey. It's not going to happen overnight, but these things happen slowly, and then suddenly all of us, it happens. So, but right now, I feel the business models are not yet very clear. It is still a more payment-related disruption that is happening rather than lending-related disruption. What I mean is that all these fintechs are not yet building their own lending book. They are only procuring clients for the existing banks or NBFCs who actually have the balance sheet to take that kind of risk. So these fintechs need to move from just acquiring clients to actually doing the credit check and lending the money of their own. Once that happens, then the whole space would have graduated, and then really the disruption risk arises for a lot of the incumbents.
All right, Ravi, before we let you go, we spoke about defense. I recall in the past, home first finance was something that you were bullish on as well. The stock has done pretty well from there. So I wanted your updated view on that one. And what's new? I mean, what's the new, stock that you're looking at or sector that you're looking at? You're done with defense. You told us your cautious stance on IT as well as on pharma. But something new for our viewers?
Yeah, so first coming to, so you know what, I will not name any company, but overall in the finance space, I can tell you that we are very bullish on the housing finance, and within housing finance also we are very bullish on affordable housing finance. This is the only segment left where you can actually still make spreads of upwards of 15-16%, and where the cost of funds overall for the companies are probably still falling, or the ability to absorb the increase in cost is far better. So this is the only non-commoditized space. It's still high touch, a lot of penetration still left to go. Housing overall has a long runway. So affordable housing finance is a segment that remains attractive, and there are some 3-4 quality names out there. Without naming any, I continue to like the space. Coming to what I would like, again, I'm not going to name any company particularly, but I think this new sector that is emerging. See, we are very, very bullish on manufacturing for the next 10 years. I would believe India is going to go from 12-13% manufacturing contribution to GDP to maybe 20 to 22% kind of contribution over the next decade. It is a very unique situation where Indian entrepreneurs are actually getting protection from competition from China, as well as they are getting a ready market where the kind of imports are getting banned. So defense actually is also a play on that manufacturing theme only, but it is one particular niche. The other place in the two areas which we are very bullish on manufacturing is, one is this electronic system design manufacturers. That there's a new space that is emerging. So if you were to actually, it is very easy. If you look at the PLI schemes and the way it is designed, you will understand that these are the spaces that one should be looking at to understand which is the space that is going to do well. Once you see PLI scheme being implemented and getting traction, that would definitely throw up big global leaders from the space. So that is one space that excites us. And the second space that, well, it does not have too many listed entities available, but is the energy transition. Energy transition, I believe, is a theme that has passed the inflection point. It is going to gather momentum, and it is going to gather momentum in a big way. A lot of companies are going to hyperscale over here. The backbone of energy transition is going to remain solar. Of course, there will be a wind play also available, and there will be other technologies also coming through, whether it is EV or batteries. But solar remains a large pool. Hydrogen is probably still a few years away before it becomes a mainstream technology that has crossed the inflection point. So at this juncture, I believe solar is one opportunity that is going to pick up in a big way. But unfortunately, there are not too many companies available in the space to bet on right now.
Ravi, great conversation. Thank you very much for joining in. By the way, there has been a pickup in the markets. We're at the high point of the day. The Nifty, when we started closing bell at 2:30 p.m., was up about 50 points. Right now, it's up close to about 80-odd points. The mid-cap index has seen a sharper recovery in the last 15 minutes of trade. And one of the key contributors on the way up has been the IT index. The Nifty IT index is now up close to about 0.8%. In the large cap space, it's TCS, Infosys. In the mid-cap space, you've got names like Emphasis, Latent View. These are stocks which are batting for the bulls right now. So some pickup seen in the markets. Let's see, we've still got about 20 minutes of trade left. Get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment, D Street Chatter.
Pooja, you left the job and still so cool?
Bro, new challenges bring new opportunities.
Oh, really?
Seriously, Rahul, my entire house, now it's an online retail store. Look.
Wow. But money?
Few years back, I'd invested my Diwali bonus.
And now you have LIC's ULIP plan Nivesh Plus. Invest once, get the benefit of both life insurance and maximize returns based on market trends.
One sec, Rahul.
Madam, you are double cool.
Will snow days be a thing of the past? Or are we smarter than that?
वोकल फॉर लोकल का नारा अब एक ही लक्ष्य हमारा आत्मनिर्भर बन जाने को अपनाएंगे
Register for MSME Z certification today.
अच्छा, आप किसान हैं? सिर्फ किसान ही नहीं, दुकानदार हूँ, रिटायर्ड स्कूल टीचर हूँ, शाम को बच्चों को अभी भी पढ़ाता हूँ। उस रात को क्या कर रहे थे? एग्री लोन ले रहा था, अपनी दुकान का सामान खरीद रहा था, एक एफडी भी बना दी मैंने और सर एक सपना देख रहा था, भारत को और महान बनाने का सपना।
आपने भी?
Canara Bank presents AI1, the all-in-one banking super app loaded with over 250 features for all your banking needs and more. आपके सपने हमारे अपने।
Thank you, sir.
Well, good up move actually is what you've seen the last 15 minutes or so. SBI Life has moved to the high point of the day. Grasim is moving with some bit of traction. You have UPL as well, that's moving higher. So it's a good recovery from the lows. HDFC as well seeing a bit of an up move. But as we pointed out before going into the break, the IT index, that's the one, that's the driving force as we speak. Let's get an insight into dealing rooms. Nimesh is with us. Nimesh, what are you picking up? Looks like some of these FIs are going for a holiday already. Yesterday volumes are very low.
Yesterday volumes are very low and we highlighted that as well, right? But today it looks like there is a bit of buying back from the large institutions. So a good recovery after a few days of consolidation. And as I said earlier, it's backed by some institutional buying as well. In fact, I understand there's going to be a market at close basket buying at a leading FI desk. Though small in size, but that's going to be supportive as far as the FI numbers are concerned in today's trade. In terms of sectors, cement, steel, even for that matter, IT is buzzing in trade. And all this sector seems to be well bid by the larger institutions. Having said that, we're still in that range between 18,000 on the downside and 18,300 on the upside. So needs to take out either side for a decisive move. So that's overall feedback. But as I said, after a few days of consolidation, a bit of recovery in today's trade and backed by some institutional buying as well. So that's maybe will reflect in the numbers as well today.
Okay, all right. So it looks like the institutions are back. But what about individual stocks? What are you picking up?
Well, that's where there is a lot of action today. In fact, if you look at the first stock is Max Financial, there is a large block. And after the block got executed, the stock is recovered as well from the intraday lows. I believe close to 1.5% equity change hands. And in terms of details, my sense is it's a clean out trade by a trust. So the trust has sold and it was well bid by domestic funds. So the disclosures will be important. But I believe it was a clean out trade as far as Max Financial is concerned. So that's the first one. The second stock is Sapphire. Off late, that stock has been consolidating, but now I believe there's going to be a large block deal very soon. So that's something to watch out for. Maybe some large private equity investors are looking to sell, and hence that stock should be in focus. The third stock is APL Apollo Tubes. Post Q2, that stock was soft a bit, but now we are seeing a bit of traction back. And again, the volumes are going to be higher in today's trade, largely on the back of buy flows at a leading FI desk. So some bit of institutional action is back in APL Apollo Tubes. And the last stock is ITC. Surprisingly, that stock of late has been under pressure. Even in today's trade, when the stock is recovered from the lows, the feedback is there is selling pressure from a leading FII. So it looks like some bit of profit booking from the large institutions in ITC of late, and hence that stock is under pressure. But given in today's trade, though it's recovered, there is still selling pressure from a leading FII in ITC.
All right, thanks very much, Nimesh. So interesting list as always, and we'll keep an eye on these names. Midesh is with us to tell us what to buy or sell today for a reverse trade tomorrow. And there is another 30 points which the market has added since 2:30. I mean, we were up 50 points at 2:30. We're up 80, 85 now. So a move is materializing pretty much now. So let me just quickly take a look at the price action. 244, 245 or so when it started, and it's basically built on since. So this is now a pretty decent day as it turns out. Even the bank nifty has come up quite nicely. Let me just tell you the big movers in terms of what is pushing things up and up by, and how much index movers there is. So I think what do we have? Infosys is the big one, which is contributing the bulk of these. Infosys and Reliance, actually, between them, that's about what, 30 points, 30 index points, essentially. Reliance will come up as well at about 25.66. So that's moved incrementally last few minutes. TCS is up, is adding about 8 index points, and then there is ITC as well, which is adding about 6 index points or so. So that's the long and short of it. Mitesh, what would you do?
Prashant, the Shriram Transport Finance was a call yesterday. I think today also seeing amazing strength, and I think the directional bias is on the upside. So that's a BDST. Keep a stable of 1335 for targets of 1375, and Bank of Baroda, the PSU banking space really has been buzzing. BOB after a few days of consolidation is breaking out. So it's a BDST with a stop at 165.5 for targets of 170.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's get in Jay Bala of cashthekiosk.com who joins in. Hi, Jay. Good afternoon. Well, the Nifty appears to be in a bit of a range. It seems that 18,450 should be a bit of a resistance. How are you viewing trade? Do you think we can correct a little bit from here and then march on? Or do you believe that we are set for higher levels?
Hi, good afternoon, Nigel, Prashant, and Rima. See, the markets are still doing what I said last week. As long as it stays above 17,969, I know the market is still trying to push towards the all-time high. But if 17,969, sorry, if that value given, the markets are likely to see a deeper cut. But as long as 17,969 is protected, now assume the market is trying to push towards the all-time highs it registered last year in October 2021. But it's very important that Reliance holds about 2450. The reason I'm saying that is, the Adani stocks are coming to an important cycle top, and they're not topped, but they are coming towards a resistance. And ITC is fading out, and auto sector is also slightly weakening. So when the market leaders are doing this, we don't want the heavyweight Reliance to drop below 2450.
What happens if Reliance drops below 2450? It's still not close to that level. I think it's now about 2570. So we're still about 120, 130 points away. But what happens if that level is breached on the way down?
Yeah, that would add, negative sentiments to the whole market. And given the fact that, the leading sector auto is weakening, and even Bharti, that's come to an exhaustion point today. If Bharti were to drop below 817, 805, that will also drag the whole market. So Reliance would, if it were to print 2450, it will say the move from the recent lows is actually a corrective move. So that's the reason why we don't want to see 2450.
So you're saying autos are seeing some sort of a fatigue on the way up. Bharti Airtel, which hit a 52-week high today, is also, seeing some signs of sluggishness at these levels. In the banking space, what is looking good? Where you still see some upside, Jay?
Yeah, the banking stocks, the heavyweights, ICICI and SBI, both look like they have an incomplete structure in the recent high. So probably they still have fresh 52-week highs to clock. ICICI above 943 and SBI above 621. But incremental position or fresh positions may not be sensible at this point. But if you're already holding these stocks, use a trailing stop and stay within the trend here.
Okay, what else in terms of sectors? FMCG, IT, you've got views on both those spaces as well, Jay?
Yeah, let's hit upon auto. It's a very important point here, Prashant. It's close below 12,750, a trend line from the March lows. And although this is close below the trend line, we still want to see a market clock a lower top and then get rejected below yesterday's low. Until that point, keep very tight trailing stops on the auto stocks and avoid longs. We were bullish on escorts. It went up 8%, 8.5% yesterday. Even that, you should be taking at least 50 to 75% profits there, even in the strong stocks. But if you're trying to short here, choose the relatively weaker ones from the pack, like Tata Motors, Bajaj Auto, and Hero, which are relatively weak within the sector.
Okay, all right. Let's take that discussion forward and talk about a couple of stocks. You're looking at Hero MotoCorp as well as Colgate. The trades and the levels on both those two.
Yeah, as I said, Hero Motor is one of the weaker stock within the auto space, and it's been underperforming since 2018. So a stop about 2766 with a short objective somewhere close to 2450. And I need to make a point here that if it were to break 2550, it'll clock a bigger bearish consolidation pattern. So it may even have potential to drop somewhere close to 2080. So watch it. It's doing some relative weakness out here. Colgate is a defensive play, although it's in the F&O space. I would say if you're trying to go long here, you should use the cash sector, not the F&O space, so that you can avoid leverage. A stop below 1530. For a long target somewhere close to 1670 or record highs close to 1730.
All right, Jay, we'll take a quick break. Stay with us. We're coming right back, running into market closing. Just 11 minutes to go for that. See you on the other side. Jay Bala, of course, stays with us. Okay, welcome back. 90 points. So basically, the market, the Nifty at least, doubled the gains from the time that we started at 230 on closing bell. We were up 50 and, you're up 92 odd points and inching higher even as we speak. Jay Bala, of course, is with us. Jay, just a quick word on the global setups. We got the Indian market kind of overview from you. What are the important markers globally now?
Yeah, the most important price action that's come is from the gold futures, Prashant. Last week's high and yesterday's low are carrying a very important message that gold hasn't seen a start of a new trend from the September low. But what the implication extending that is that usually precious metals have an inverse relation with the dollar. So the message the gold futures are saying is that the dollar hasn't peaked. You are likely to see further highs coming through for the dollar index, and probably looking somewhere close to 116 to 120. But we would like to see a print of 109.37 on dollar index spot. Once that is done, we get the confirmation that the next leg up is on for the dollar index. So, and as far as the US equities are concerned, I think there is one more higher high coming for the short term for the S&P futures, as long as it holds about 3867. If 3867 breaks, we are seeing the probability the market is already peaked. But as long as 3867 is protected on S&P futures, I think next high is coming somewhere close to 4020 or to 4080. But this carries a stamp of a counter trend rally. Nothing beyond that. We're going to see a resumption of the downtrend once this final leg up is done.
A sector which is closely linked to what happens globally is the Indian IT space. It's replicating the moves on NASDAQ. Any thoughts on Nifty IT and any individual stocks where there is a trade?
Yeah, see, Nifty IT, I'm not bullish on it from a medium-term perspective, but I'm not fully convinced that it's put in a medium-term bottom. But at the same time, also not bearish. So, it's somewhere in the middle and it's giving ambivalent signal at the moment. But the mid-cap ITs are doing quite well. And from the frontline name, HCL Tech is showing relative strength. The key resistance is about 31.5 on the Nifty IT index. We'll see what the market does around that level, and we'll have. I'm hoping to see much clearer message from the sector. I'm bullish on mid-cap names, persistent. In NIT, NIT Tech, which is Coforge now. I know we've been discussing that for the last couple of weeks, and we need to see a little more price action work through. But I'm very neutral on it. When it comes to the Nasdaq, I'm seeing probably a push somewhere close to 12,800, and then start of the next leg decline. So let's see if the Indian IT outperform the Nasdaq.
Okay, all right, Jay. Final question then from my end. What about Dr. Copper? How is that looking on the charts?
Yeah, that's also driving an important message, Nigel. The recent high that we saw at 3.96, that's a counter trend move, and it's very clearly signaling that the next leg down has begun, and we are going to see probably fresh low below the 2022 low. I have a price subject to somewhere close to 2.82, but from a long-term perspective, I'm bullish on a very long-term perspective. But first, it needs to get to 2.82 to complete the short-term correction. And then we can get bullish on the metal sector and also metal stocks.
All right, Jay, we'll leave it there. Thank you very much for your time. Great speaking with you, and see you next week. Thank you. Well, the market is just sort of winding down, 3 minutes away to close. And it's basically all in the last, there were two parts of the market. The first part was the first 45 minutes, and the next part was the last 45 minutes. Almost exactly, that is where most of the price action really happened. In between, not very much. From 10 o'clock to almost about 2:45 or so, nothing at all. So let me just quickly outline where the push higher in the last, say, 45 minutes came from. Infosys, TCS, the tech names, incremental gains from Reliance, incremental gains on ITC, and names like ICICI Bank. I mean, this is the part of the market which really contributed a fair bit to the push which we saw. In any case, I mean, the broader market also, there were, I think, except the real estate index, even pockets of stocks, sectors, etc., it was all positive. Real estate was down, but that was the only one. IT was higher, as I said. PSU banks, another day of gains, and there was the metal space which contributed in a decent way once again. In terms of absolute gainers on the on the index, on the Nifty, that is, sort of day-on-day gains, that's coming through in IndusInd Bank, which ends at the high point, 3% higher. JSW Steel with a 1.9% gain, and NTPC, which ends up about 1.7%. Rima.
Well, PSU banks did well. So you've got UCO Bank, Bank of Maharashtra, Bank of India, which was up close to about 4.5%. Apart from that, you had strength in these defense stocks. So Mazgaon Dock, Cochin Shipyard, Garden Reach Shipbuilders, both of them. All these three names made a comeback. Easy Trip locked in an upper circuit of 20% for the second day in a row. The new kid on the block, Kaynes Technology, goes home with a gain of nearly 17%. It had a gap up opening, but it's managed to build on that as well. IT made a push higher towards the end of trade, so names like Emphasis, Latent View also ending with considerable strength. On the losing side, the new age company's Paytm is now down 78% from its issue price of 2,150. Another 11% gone on that fresh 52-week low, and Nykaa too losing close to about 4.5%. Nigel.
Well, before we get to the stocks, one graphic play that should come up for you. Yet again, the number of stocks advancing are lower than the number of stocks that are declining. So that's telling you that portfolios really aren't seeing big gains out there. So just keep that in mind. But there were stocks that were moving around. You had some of those unknown names that we don't talk about very often. BSL was up 20%. Copran was higher in today's trading session, so that was flying away. High-tech pipes are looking at doing a preferential issue, so that stock did pretty well. Lotus Eye Care Hospitals, that stock as well was higher in today's trading session. You had Mirza International. Well, that one was sprinting actually, was up more than 10% in trade. Gandhi Special Tubes as well was flying away, and FM Industries, well, that stock has been on a tear actually. All of this year it's been doing pretty well, and FM Industries as well was up close to around 9% odd. ISMT was another stock that was up 8.5%. So a good session actually for the bulls. If you're looking at the headline index, that's the Nifty. A couple of large names did well that pushed up the index. The mid-cap index as well went home with gains of close to 0.5%. The Nifty Bank didn't perform, mind you, today, but otherwise the breadth of the market, that's a little bit disappointing. Otherwise, it was a rather good day for the bulls. Well, on that note, though, we'll have to wrap up on this edition of Closing Bell, but you don't go anywhere. Our Tuesday special, Commodity Champions, comes up next.